Hello friends, my name is Rachel Smith, and this is my second time recording this because I have no idea where to find the first one on my computer. So here we go. The question in the book states, in the first year of operations, Gomes Company recognized $28,000 in service revenue, $6,000 of which was on account and still outstanding at year end. $22,000 was received in cash from customers. The company incurred operating expenses of $15,800. Of these expenses, $12,000 were paid in cash, and $3,800 was still owed on account at year end. In addition, Gomes paid $2,400 for insurance coverage that would not be used until the second year of operation. So that's all the information we have to go on. And the first thing that we were asked to do is to calculate the first year net earnings under the cash basis of accounting, as well as calculate the first year's net earnings under the accrual basis of accounting. So I've set them up into two different columns, one for cash basis accounting, one for accrual basis of accounting. We're going to go over cash basis accounting first. The definition for cash basis accounting is that revenue is recorded when cash is received and expenses are recorded when they're paid. So if we go up, I've separated the question into three different sections, one for revenue, expenses, and additions. So the first section we have is revenue. We had $28,000 in revenue. If you take that, subtract 6, which we did not receive because we did not receive the cash for the 6, we're left with $22,000 in cash, which is what we are going to put under our revenue for our first year of our cash basis accounting. Next, we have expenses. We have total expenses of $15,800, which $12,000 were paid in cash and $3,800 were still owed on the account at year end. So if you take your $15,800, subtract $3,800, you are left with $12,000, or you could just notate that it says we have paid $12,000 in cash right here, which is what we are going to put for our operating expenses. Right here, we have a negative value of $12,000. In addition, Gomes prepaid $2,400 for insurance. That was paid during the first year, even though we're not using the insurance, it was still paid. So that would still be considered an expense under the cash basis accounting. So that's also going to be a negative value. So if you take your revenue, subtract your expense, all of your expenses, we have a net earnings in our cash basis accounting of $7,600. Next, we go to accrual basis accounting, which in the book is stated as transactions that change a company's financial statements are recorded in the periods in which the events occur. One thing I want to point out is that's even if cash is or isn't exchanged for the things that happen during that time. So we have $28,000 total in service revenue, which is what was done during the first year of service. So we are going to put that as our revenue value. Even though we've only received $22,000, the entire amount of service revenue was completed in year one. So we're going to put that value under our revenue in year one for accrual basis accounting. The same rules apply for expenses. So we have a total of $15,800 for expenses. Even though we were only paid $12,000 of that, we are still going to account for the entire value because that is what was used during the first year of business. And next we have insurance, which was prepaid for next year. So this was not an expense that was incurred during the first year of operation under the accrual basis accounting, even, like it says, even if cash is or isn't exchanged. So we're going to take our total revenue of $28,000, subtract our expenses, which gives us a net earnings of $12,000 for the year. So which basis of accounting, cash or accrual, provides more useful information for decision makers? Coming from the standpoint of a business, you're going to get a better picture of what the company is actually doing through the accrual basis accounting, because in order to put the accounts receivable, accounts payable, services, etc. on your accrual basis accounting, you have to have a service in, service out in order to put that onto your accrual basis accounting. So you're going to get a much better picture of the actual standings. And you'll notice a big difference here. You're almost double your net earnings under the accrual basis accounting. So I hope you enjoyed the video. If you have any questions, please let me know. I hope it was done correctly. I actually don't know if it was or not, so I'm not sure where to find the answers in the book. I need to figure that out. So thanks, guys. Have a good day. Talk to you later. Bye.